Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. On the gold market situation right now is really tricky because as market has started the upside rally in November and everybody starts to talk about the changing in the sentiment and the shifting, so maybe some reversal is happening and start to find some reasons that could support this action and so on. And we also have analyzed these talks and recent data, and we said that yes, really some signs have appeared, but gradually this action start to fade. And right now on the surface, it seems that nothing has changed, but in reality there is some real phantom menace has appeared, as the Star Wars episode, right? The phantom menace has appeared for possible downward action. In today's comments, the Commerzbank analyst tells that they think that gold will remain under pressure in the coming of the first half of 2015, and they talk that gold really could reach the 11 even area. And that's not just occasional thought, and there is really some signs that makes this expectation and this scenario not absolutely impossible, because as it has started really fast and furious with this closing of the massive closing of the shorts on the gold market, this raising of the positive non-farm payrolls impact. So I recall this was really a big surprise in non-farm payrolls and was erased fast at the closing of the shorts and so on. Gradually, this section becomes thicker and weaker, and now the signs that we see really put some questions on the perspective of this rally. For example, recent CFTC data doesn't show any improvement in the net long position. Positions have been contracted, shorts have been contracted, longs have appeared on the previous week, but on the last week, open interest just has contracted, and as long and shorts positions were reduced. Yes, this could happen maybe due the end of the year and the Christmas Eve and so on, so investors do not want to take any drastic steps before the year end and has postponed this action on the January. That could be the one reason. But what will happen if the short positions will be reestablished in the January? The second moment here is the discounts in India to the spot prices of the gold in London. In a normal, when the gold behaves normally, the small premiums exist in the nation market. Usually $1-2 exist as a premium. When the really big rush of the demand appears on the gold market, the Asian premiums could reach as high as $5-6 per ounce, and this is general normal situation. But when the Asian market stands on the discount to the London prices, that tells us something. At least this is not absolutely normal when the market stands at the eve of some rally, as is suggested by the recent data and recent sentiment, disclosing shorts and so on. This makes me think that probably, as we have discussed already previously, especially after the Fed Reserve meeting, it probably has been done really as the end of the year. So big funds and investors just has contracted the positions because they haven't expected nothing drastic from the Fed, and this really has happened. They just contract this, reduce risks before the long holidays. That's probably the major reason, because I do not see any continuation for that right now. I do not see any signs of the really big growth and so on. That's what about the long-term situation. On the short-term perspective, although we have this possible head and shoulders pattern that's really could appear, at least theoretically, the market still keeps chances on its appearing. But what is going on right now in this recent couple of weeks? So following the, according to the head and shoulders market mechanics, the final impact of the bears usually make at the bottom, to the bottom, in a row to the bottom of the head. Here should be the capitulation of the bears. The last power that bears have, they're trying to push market lower but failed, and bulls take control of the market and push market higher. But here it's very difficult to call this the capitulation, because we see this plunge down first. And take a look, any attempt of the market right at the bottom of the right shoulder, where there really should appear the starting action in the impulse action of the bulls, any attempt to go high has failed. So you can see here, market has failed, return rate back down. Here again was an attempt, again return rate back down. As long as market will stay right at the bottom of the shoulder, this will be less and less bullish situation, and this will increase. As long as market will hold there, the greater will become the chances of the failure and downward action. Taking into consideration all recent data, especially from the safeties, from the SPDR fund, by the way, guys, SPDR fund has shown and is showing right now the flat progress, and the storage is increasing, so even more storage has decreased for the 1 ton for the recent week. So that was just an initial jump for the 5 tons on the 2 weeks ago, and that is also not very supportive, and it's a bit very fragile hopes for possible upside action. And right now, take a look at the 4-hour time frame chart. The one pattern that we only have here is the possible head and shoulders. I don't see any other really nicely looking patterns here. Even this head and shoulders looks a bit ugly, but if it will work, that will lead market probably to somewhere in the area of 1165, 1170. Market could hold 1175 action, and this will not break harmony here too much, so probably market will show a bit deeper action, right? But 1170, 1175, that will be really breakout for this area, will mean that the upside action has failed, and the head and shoulders has failed. And the general appearing of the head and shoulders pattern here doesn't look really fascinating for the bulls. So guys, that's been said, combining all the information that we have right now makes me think that the chances on the downward continuation right now seems preferable, because gradually the upside momentum, upside euphoria has come to an end and has faded significantly. Right now we already do not see this mass support, mass purchases that we saw here. Recent CFTC data doesn't show any improvement in the bullish sentiment, and that makes me think that this was mostly action. It's just profit taking closer to an end of the year from the investors. And right now, guys, we do not currently tell that upside action can't happen. But analyzing all information that we have right now, we just think that the chances on the downward continuation seems right now a bit more preferable, and has more value. It's better to say in this manner, has more value than upside continuation. Because recent standing on this indecision right in the bottom of the right shoulder potential pattern, it looks really warrants. Looks suspicious. So anyway, market probably will remain quiet and lazy till the end of the year. Let's see what will happen, and probably major action will happen on January.